Jay,
Good morning, Lata.
markets have come a distance from the kind of lows we saw. How are you feeling about the markets at the end of halfway through the result season? Are you buying more at all?
I don't know. No, we are not buying more at all, Lata. In fact, we are, wherever we find that the results have been kind of disappointing, we have been exiting because, in a scenario like this, where with the good ample liquidity, if the stock price can't be supported, then I don't think in an environment which we could see post-December, the same shares could see a price support coming in spite of the indifferent performance. So really, this is a time to clean out the, the unworthy, the non-winners, and so on, because in this supportive environment is the best price you can get for them. The environment is not going to become better as we go down the path, certainly not in the first quarter. So I think this is a time to seed out, not to load up.
Okay. Well, Ajay, in your own analysis for the companies that you cover, how has the earnings season been so far? More upgrades or more downgrades?
Well, I think, in the company, some results have still to come in. Most of them have still to come in. But I think broadly what we have seen is it's been an indifferent set of numbers. That's one. There's not been no major surprises on the negative side or on the positive side. It's been, it's somewhere in the twilight zone where you don't know where the companies are going, really speaking, Lata, to be honest. Some have been ranked bad performers, leave it aside. But I haven't seen a ranked good performer except the surprise which you got at the IndusInd Bank. I think that one was surprised on the upside to the result that we saw. But otherwise, it's been more like it's an indifferent kind of a market, indifferent performance. Economy is kind of trucking along. Companies are just about managing their balance sheets. So it's not been a very, what I would say, inflection point kind of a quarter that you can take a call on the company that things have changed or things have gone really bad.
I thought you would talk about the pharma space and say, you know what, I told you so about the good quality numbers, because this time pharma has been exceptional, Ajay.
I have my good friend called Sonia who will bring it up, so I don't have to. No, Sonia, I keep saying to everybody that people, really ask me lots of times, even at the airport, saying that what's your problem with pharma? That's the actual question asked is, what's your problem with pharma, quote unquote. And I keep saying that with this country of this size and what's happening in the US on the generic side, our companies are just the gold mines waiting to be picked up by the MNCs around the world. It's going to happen, and we will have a big bonanza there. So these are companies which you do not sell. Every correction you buy. Okay, Sun Pharma may have an indifferent kind of a year for the Ranbaxy, but leave it aside for a year, it'll pick up. But you saw the results, the Reddy's, the Torrents, Lupin kind of disappointed, but Lupin had a very good run. If you look at the last year's stock price, had an excellent run last year. So, you will have those correction periods in it all. So I think as a sector, you've got to be very clear that in the market that we are seeing today with an economy which is struggling, Indian economy is struggling today, that's a fact. This is one sector which does not have a demand issue and a pricing issue. It may have pricing issue down the line, but today it doesn't. So do not desert this sector.
Okay, Ajay, I wanted to ask you about the private banks, but before that, why don't we listen into a couple of things that the Yes Bank guys told us. We have to listen also because it's the best performing stock in the Nifty today. At a time when the Nifty is flat, I think Yes Bank has posted 1.5% higher stock price. So let's listen into the Yes Bank management.
The loan book, as you will see, has grown 29%, on top of which NII has also grown 29%. In fact, the NII growth has been relatively benefited by the fact that if you compare it on a year-on-year basis, as we compare the second quarter this year with the second quarter of last year, we have had a small improvement in our margins as well. So our margins, which was 3.2 same time last year, is now 3.3, which means that with the same balance sheet, we should be delivering higher NII. So if the balance sheet has grown close to 25%, NII growing at 29% is pretty consistent given the expansion in margins. We've also received some repayments in the last quarter, so that has been a little bit of a influence in the net growth being a little lower. But we are also now coming off the not so busy season, and we are entering the busy season. We do expect that the loan growth will pick up sequentially for sure. Year on year, we continue to still have a very strong base. So we do think that our year-on-year loan growth numbers will remain in the same range, but the sequential growth numbers will look better. Well, we do believe iron and steel is still a sector which has not seen material recovery. Our exposure to iron and steel is about 3.5% odd. but if you see in our disclosures, we've also mentioned that about 3% of that has a rating of A or better, and which means these companies are per se the stronger companies in this sector. We do expect more action from the government in the iron and steel sector going forward to facilitate this a very important sector in the Indian manufacturing space. So we're not looking at any sort of surprises coming up for our portfolio in the iron and steel sector as such.
Okay, Ajay, straight away to you. The market punished Axis Bank. Yes Bank numbers have been well received. Where do you stand on private banks?
See, market punish, Lata, Genesis is market punish Axis Bank because of the integrity of the data, what they have been spinning out. It was not the result. You can't have a standard asset being sold at a 60% discount overnight. So there is an issue with the disclosure in the balance sheet. And the reason you asked me what is the state in private bank, I say look at pedigree. The pedigree is going to make the difference in your investment strategy where you put your money. Axis Bank head is the pedigree is ICICI Bank. These two, and you know about ICICI Bank, nothing more can be said about how poor the balance sheet is, how poor the performance is. You know, so you have to believe in the fact that you are not in a banking environment, you are not investing with the bank, investing with the people at the helm of the bank. That is why you invest with Aditya Puri, you don't invest with HDFC Bank. You invest with Yes Bank with Rana Kapoor. You know, IndusInd Bank, you never invested there till Ramesh Sopti arrived there. So, you know, it's a people-specific investment. You don't make institution-specific because there is a pedigree, the backlog, which you'll have. So if you're investing in private banks, I keep saying, look at these 3, 4, 5 banks which have got strong pedigree. Do not go for something, you know, traders can do differently. That's all right. But investors should be mindful of the fact that people like ICICI Bank, Axis Bank leadership come from the same bunch of people who literally ran the bank into the ground. And the banks, look at the PE of ICICI Bank, it's half of HDFC Bank. So really it's a question of integrity, pedigree, not of the institution per se. But stick to investment. I think they're good proxies for the economy. They're doing well. You may not get spectacular return because they're not cheap stocks, but they are steady stocks that give you steady returns. So I think that's a strategy, steady stock, steady return. I don't think you'll not earn above the market with these banks in the next 12 months, but you'll certainly stay with the market.
Okay, with these
your thoughts, not ours, Ajay. But to be fair, you would look at people.
You don't share them, Lata.
You would no comments on that at all. But I would say that you would look at corporate governance everywhere, not just in banking, maybe more so in banking. But in any case, you would look at people. You would not bet really on the sector. Well, speaking of that, actually, I wanted to ask you also about the FMCG stocks. You know, Emami's numbers at 17% are good, but Emami always gave us much better numbers. And Dabur, I would think, was a steady set of numbers. Today, ITC is round the corner. That segment itself?
But this is again the same story of the promoters and the pedigree. Dabur is a must invest, always invest, good quality promoters. Godrej, excellent. Emami was good till I believe they bought something pretty expensive. If I'm not wrong, my memory is getting older, so it's not, but I think they bought something very expensive of late, if I'm not wrong. And that's the time I think we exited Emami at that point of time. So I think, you know, Emami has an event which is linked to it, not necessarily do with the promoter or the operation. So maybe that's overhang has come onto it. But I think for people like Dabur and Godrej, you don't need to worry about. ITC, I always stay away. I'll be the first buyer when leadership changes in ITC. I'll be the last buyer with the present leadership in ITC.
Okay, with these kind of scathing comments on the private sector banks, Ajay, I don't even want to ask you what your view is on the public sector banks. You know, so we'll keep that conversation. We'll leave that conversation for another day. But what are you recommending investors to do now? You know, you started off the conversation by saying don't load up. But there's still so many opportunities. I mean, even credible stocks are falling 5-10% post their numbers just because sentiment is bad. Do you leave this opportunity?
No, Sonia, I think sentiment is very good. That's why I said I have a contrary view is the sentiment is very good today because the liquidity position is abundant today. Sentiment will turn bad come January if the December hikes takes place. And you know, so that is one. And I tell you why sentiment is very good. When a stock like Indigo gets subscribed with a zero net worth of the company and promoters, and I didn't even know how you can pull out dividend more than net worth. It's a lesson for me also in corporate finance. But if that stock gets promoted in the manner it has at this pricing, which tells you that the supply of money is so abundant, it doesn't care about company and the ratings. So, you know, contrary to what you think, I think it's a good time to be there because the money is abundantly available. Having said that, our strategy is as follows. In fact, we're going to release a note very soon is, take 25% of your portfolio illegally, all legally if you can, outside and invest in the US. That's our first strategy now. Because India is going to be an indifferent market and going to be a stock pickers market, is not going to be a sector pickers market. And India, you stay with the winners, not the losers. That's the second strategy. And third is identify a concept called risk capital, which you do invest in what is your quote-unquote turnaround stories and hope they give you mega blaster returns. So it's 25% US, 60% investment ideas, and 15% into risk, what I call risk investments at this point of time. That's the way we are releasing a note for investors to break up there and do a lot of money. And in our whole portfolio, put 50 to 60% in fixed income, because that will give us superior return than equity in the next 3 years.
You know, I had the same argument about Indigo IPO. Even I didn't understand why there was so much subscription, you know, when there are serious corporate governance issues staring at your face. But what did you recommend investors to do? And now post-listing, what kind of returns do you see? Because the numbers that they have put out for the last many years are quite good.
No, numbers are good, but we are starting with a company with zero equity, only leverage. That's a starting point, and at a pricing which is at the top end of the performance, even at the best case scenario it is. So as I said, in an abundant liquidity scenario, even this is bought into, but we have not recommended a buy on this investment at this point of time. It may still go up at the end of the listing, which will, because of the float is going to be very small in the market, but that doesn't take it away from the fact that such IPOs, and go back to the memory of, Sonia, I think you're too young for that, perhaps I'm older, is that Reliance Power IPO was an inflection point in the market. It was something identical to what Indigo was. It was a startup, it had projects in pipeline, it had a huge premium of 60 rupees or thereabouts. And I think that is the kind of, which tells you the exuberance of liquidity, invest in everything which comes your way. Maybe that was, Reliance Power was a negative inflection point. I don't know whether Indigo portends to the same way or not.
You're saying Indigo will be a negative inflection point, Ajay?
I don't know. Lata, I said Reliance Power was, if you remember, the go back to the memory.
I completely agree with the Reliance Power. It was January of 2008 and indices were at their height, and already we had seen the Bear Stearns event behind us in the US. So that inflection point was had a lot of factors to it. As well, Reliance Power did not have any projects. Indigo has already been run for a goodish bit of years under difficult circumstances with profit. I mean, I'm not taking away from the corporate governance issues that you raised, Sonia, but I'm just saying that it is a company which has proven that it can run profitably. Reliance Power had not any implemented projects at that time.
The issue is not proven. Issue is at the premium which the company is asking you to invest in. Okay. That's the issue at the stake. Okay. You know, if it's a normalized premium, yes, it's a zero net worth company, and the premium of the valuation reflects it. The valuation premium is at the top end of the company's performance. Let's also not ignore that. That's what I'm saying. Relative to the pricing at which the issue is coming out, it's not per se the concept of a zero net worth company having a good business plan and operating on the ground. It's the valuation which is at the extreme end of what the best performance would look like. That's the issue.
Fair point.
No, I take your point completely. You know, the similar case happened with Jet Airways as well. The IPO price was at about 1100. Now look where the stock is. And at that time too, Jet Airways was in the peak of its health. So I take your analysis completely on Indigo. But we've run out of time. We would have loved to chat some more. Ajay, Srivastava, have a good weekend, and thanks so much for joining us.
Thank you.
Well, that's the word coming in on the market. Don't load up at this point in time. You'll get better opportunities in the next couple of months.